I just finished reading the book Safe Money Millionaire, and it was a little disappointing. It was disappointing for a couple reasons. Number one is that the author took so long just to get to the point of the book. I shouldn't have to wait until chapter number 4 to understand what you're talking about and how that's going to help me. So that was incredibly frustrating that the authors kept repeating various things throughout chapters 1 through chapter 3, and then started talking briefly about it and brushing over it in chapter 4. It wasn't truly until chapter 7, 8, 9, 10 that the details of what they were talking about was revealed. Hey y'all, my name is Maria, and today we're going to be doing a recap of the Safe Money Millionaire book. The secret to growing wealthy without losing your money in the Wall Street roller coaster. That's the subtitle of the book. And basically what the authors are talking about is that instead of investing your money in the stock market and index funds and tracking the market and whatnot, that you would get a modified cash life insurance and then buy against or loan against that cash reserve that you have in the insurance. So this way you don't have to pay insurance to the bank. You end up paying insurance to your life insurance policy, which ultimately is yours or your kids or the people who survive you once you pass. Versus, that's the whole premise of the book, is not paying interest to the bank or to others, but paying interest in a way that it benefits you. It seems really scamish to me. It might work and be fine. I think it's very interesting that this is not something that many people are talking about. I understand why Dave Ramsey wouldn't push this because it does seem a little bit risky. However, for the Money Guy Show or other finance YouTubers, I'm not quite sure why no one ever is talking about cash term life insurance and to borrow against that. One of my friends I was explaining this book to thought maybe this is something that's being gatekept by the wealthy, which is not something that I had really thought of, but it's possible. At the end of the day, the links in the book no longer work, so I think that's a little fishy. But then also the author's perspective on investing was not in line with those who hold the buy and hold forever type mentality. And so I understand more having read this book about the negative and the downside of investing in the stock market. Some of that is that we often think that the stock market will recover if there's ever a downturn within 2 years, but there are times in history where it hasn't recovered for 8 or 9 years, and I feel like we don't hardly ever hear about that or talk about that. We always say that you just buy and hold and wait it out, but sometimes you might be waiting it out for almost a decade. Another thing that I learned was that in retirement, you probably will have fewer tax deductions. And so I think people often think that they'll be in a lower tax bracket in retirement, but also you have fewer deductions. So maybe you'll be higher. And depending on if you're counting for Social Security or not, that could bump you up as well. One thing I really liked in this book was that they gave a really good analogy for the difference between traditional and Roth IRAs and 401ks. Basically, they said that either you can tax the seed or you can tax the crop. So the idea that you tax the money that's going in or you tax the money that when it comes out. And so I think that's a really good visual because in both cases, the money's going to grow, but did you pay taxes before or are you going to pay taxes after the growth? So the authors have this way of guaranteeing growth. And when one guarantees growth, that has sirens going off in my head, but how they do it is that they guarantee a certain percentage, maybe it's 12%. And so even if the market goes up to 36% or up by 23%, you still only get 12%. But on the downswings, when the market turns down, you still would be guaranteed that 12% because you have been capped at that 12% on the upswings. Overall, I can see how if the financial gurus of the internet were more proactively supporting this or more vocal about supporting this idea of the modified cash value life insurance, that it would be something that people would try. I really have not done enough research into why it doesn't seem to be talked about. So I can't recommend this book for hardly anyone. I think it's good if you just want to learn a different perspective on how you potentially could get to retirement faster, or how you could potentially go a different way for financing your larger purchases. However, I definitely don't think this is a book for people who are just getting into Dave Ramsey or just starting out and being financially disciplined, whether it's budgeting or achieving their financial goals. I would say this is definitely for someone who is more even-keeled. You're buying and holding. You're not doing anything irrational quickly. But I don't know. The book was a quick read, which was really great. You can see here the words are in the lines. It's a very quick read, and I will link. I found a PDF down on the interweb somewhere, so I'll link that down below. I rate this 2.5 stars. 2 stars just because it's not that great, and I don't know if it's a scam. A lot of the numbers that they shared, it's interesting how you can skew numbers and data to make your points, and so I saw that on this when they're talking about the stock market and various downsides to investing in the stock market. I also did not like this book because the authors used a conversation between a financial planner and other people to tell how you can be a safe money millionaire. And that is just incredibly cringy to me. Whenever authors do that, that's like 3rd grade level writing. That's the type of writing that I would write, and I'm a terrible writer. And so it's just the worst when authors use a casual conversation to communicate what they're trying to communicate. I didn't like that. But if you want a little airplane read, if you're close to your Goodreads book goal for the year and you want to cap it off really quick, this is something to think about. I'm not taking action on anything on here. I definitely would want to read more about it and to hear other people's thoughts before getting into this. And this would be more, I probably would use it more for large purchases. But once I have kids, I don't have life insurance now. I don't have kids. I don't have a spouse. So I don't need this. Also don't really have large purchases I can think of that would need to be financed. So 2.5 stars. On Goodreads it is 3 stars, only because I don't think you can do half stars. But yeah, that's Safe Money Millionaire. Thanks for watching.